Hey everyone, and welcome back for another deep dive. I'm excited for this one. We're going to be taking a look at a really interesting stock chart pattern today.
Right.
It's called the square box.
Oh, yeah, the square box.
And, some traders, they think that this can give us a little sneak peek at where prices might be headed.
Absolutely.
So if you're just starting to dip your toes into technical analysis,
Hmm.
looking at charts, trying to figure out all those squiggly lines,
Right.
the square box pattern is actually a really good one to start with.
Yeah, it's pretty easy. Visually, you can see it right there on the chart.
Yeah, exactly. And for all of our learners out there
Yeah,
who like to get in and out of trades kind of quickly, this is one that can play out in just 4 to 7 weeks.
that's right.
So, you know, potentially a little bit quicker profit there.
Mm-hmm.
But before we get too far, let me just throw out our standard disclaimer.
Of course.
This is not financial advice. This is just for educational purposes only.
Absolutely. This is just a deep dive into how this pattern works.
Yeah, let's break this down. What does the square box look like visually on a stock chart?
Okay, so the square box, it's also known as a rectangle range.
Okay.
And what it shows is basically a period of consolidation in the stock's price.
Consolidation.
Yeah, so imagine like a tug of war between buyers and sellers.
Okay.
They're kind of locked in this battle, right?
Hmm.
Pushing the price up and down, but it stays within this defined range.
So it's like they're kind of stuck in this box.
Exactly. They're trapped in the box for a little while.
Interesting. So they're consolidating, but what does that actually mean for the everyday investor who's watching the stock?
Okay, so think of it this way. The stock is basically taking a breather.
Okay.
It's digesting all the recent news or events.
Mm-hmm.
It's not making any huge moves up or down yet.
Right.
But that doesn't mean it's boring or inactive.
Right.
This back and forth price action.
Yeah.
That can actually be a sign that some energy is building up
Ooh, okay.
for a bigger move later on.
Gotcha. So how do we actually spot this square box pattern on a chart?
All right, so picture this. You've got a stock's price, and it's bouncing between two clear horizontal lines.
Okay.
And those lines, they form the top and the bottom of the box.
All right, I'm picturing it.
Those are your support and resistance levels.
Okay.
Support down at the bottom. That's where buyers tend to step in and say, hey, this stock is a good deal. I'm going to buy it.
Right.
And that kind of holds the price up.
Right.
And then you've got resistance at the top. That's where sellers come in and say, all right, I think this stock is a little too pricey right now. I'm going to sell.
Okay. So it's kind of like a ceiling and a floor.
Exactly. It's like
Yeah.
a ceiling and a floor for the price.
So it's bouncing between those two levels.
Yeah, and you'll typically see multiple touches of those levels.
Okay.
That's what creates that box shape.
And you said this happens over like 4 to 7 weeks?
Yeah, typically 4 to 7 weeks you'll see that pattern forming.
Got it. So we're looking for that clear, boxy pattern for at least a month.
Right.
Okay.
Yeah.
But how do we know this isn't just some, random price fluctuation?
Great question. The key is looking at the details inside the box.
Okay.
And specifically, we want to pay attention to the volume.
The volume.
Yeah, the number of shares that are being traded.
Okay.
So during the formation of this box, if you see that volume generally decreasing,
Mm-hmm.
that suggests that that battle between buyers and sellers is starting to wind down.
Oh, I see.
They're taking a little break before the next big move.
Okay. So it's like the calm before the storm.
Exactly. It's like the calm before the storm, and that's what makes this pattern so exciting.
I can see why traders would be watching this closely.
Right, because something's about to happen.
Yeah. So we've got the box. We're watching the volume. What's the next clue that a breakout is coming?
Okay, so here's where it gets really interesting. You want to watch for volume spikes,
Okay.
specifically on those upward price movements inside the box.
So when it goes up.
Yeah, exactly, when it bumps up against that resistance level.
Okay.
If you see a big surge in volume, that's a sign that buyers are stepping in aggressively. They're accumulating shares. They're getting ready to push that price through the resistance.
So increasing volume on those upswings, that's our green light.
That's the signal.
That something might be about to happen.
Exactly.
Okay, I'm hooked. I want to know how we can actually trade this pattern. How do we confirm a breakout, and how do we make money from it?
All right, so the confirmation comes when the stock's price closes,
Okay,
decisively above that resistance level.
above the top of the box.
Above the top of the box with a significant increase in volume.
Okay,
Ideally, you want to see volume that's 40 to 50% higher than the average volume.
wow, so way more people are buying.
Exactly. It's a huge vote of confidence from the market.
So the buyers have won the tug of war.
They've won the tug of war and they're driving the price higher.
Okay, that makes sense.
Hmm.
So once we see that breakout, how do we play it?
So one common strategy is to ride that momentum
Okay.
by setting a price target.
Okay, a price target, what's that?
Basically, you're saying, hey, I think this stock is going to go up to this price. And many traders aim for a gain of about 10 to 15% above the breakout price.
So let's say, for example, a stock has been trading in that box
Yeah.
between $50 and $55 for 6 weeks.
Right.
And then it breaks out, closes at $56 with a big jump in volume.
Right.
So we could set a price target somewhere between, what, $61 and $63?
Exactly. You got it. You're picking this up quickly.
Well, you're a good teacher.
Uh-huh. Well, every stock and every situation is a little bit different.
Right, of course.
But that gives you a general idea.
Yeah, good framework for figuring out how much profit we're aiming for.
That's right.
Okay, this is making a lot of sense.
Mm-hmm.
We know how to spot the pattern, how to anticipate the breakout, even where to set our price target.
Mm-hmm.
But what about managing risk?
Yeah, yes, that's crucial.
What if that breakout fails and the price goes down instead?
You always got to have a plan for that.
Right.
And this is where a stop-loss order comes in handy.
A stop-loss order, okay?
So you place this order just below either the breakout level or the support level of the box.
Mm-hmm.
And if the price falls below your stop-loss, your shares are automatically sold.
So it limits our losses.
Exactly. It's like a safety net.
I like that, a safety net for our money.
Right, because no pattern is foolproof.
Right.
You can never be 100% sure what's going to happen in the market.
Exactly. So the stop loss helps protect us.
Exactly.
This has been really helpful. We've covered a lot of ground here. We know how to spot the square box, the importance of volume strategies for profit and loss.
Yeah, the square box is a great tool to add to your trading arsenal.
Absolutely. But before we wrap up,
Yeah.
any final words of wisdom?
Absolutely. Just remember, technical analysis is all about probabilities, not guarantees.
Right. It's not a crystal ball.
Exactly. It's
Yeah.
not a crystal ball. So it's important to use the square box along with other forms of analysis.
Mm-hmm.
Do your own research and never risk more than you can afford to lose.
Great advice. So to all of our listeners out there, now that you know about the square box pattern, start paying attention to those stock charts.
Absolutely.
You might be surprised at how often you start to see these patterns emerging.
Yeah, they're everywhere once you know what to look for.
Exactly. And here's a little something to think about as you keep exploring.
Right?
Could there be similar patterns
Ooh, interesting.
that play out over shorter or longer time frames?
I like that question.
Right. So keep learning, keep charting, and we'll see you in the next deep dive.
See you next time.
Bye, everyone.
Bye.